This is Michael Glass, and I'm excited about the opportunity to be sharing with some folks, and hopefully we'll be getting started shortly. As people come in, it's 8:03, 8:04. So first time using Google Hangout on air, Google Live, Hangout Live. So certainly going to have some hiccups along the way, but hopefully we'll get through it together, and more importantly, we'll all learn something. That's what it's all about. So let's see if we can start getting some people coming. All right, at this point, we're just waiting for people to show up. I just opened up the room or the Hangout. And of course, you know, our people, we're never on time. So we'll see how it goes. So don't mind the awkward silence, just trying to allow some time. I know how many people said they were coming, so I'll cut that number in half. It's about 8:07, and again, just trying to allow some time for people to show up. But regardless, probably just going to go ahead and get started in the next probably 3 minutes regardless. And, you know, it's one of those things, you snooze, you lose. If you guys see the chat, do you guys see the group chat? If you want to, I guess we'll go with your forum name, if you want, or if you just want to say where you're from. See if we got some people from the same area. I'll go first over here. Or at least here to say what up. Again, regardless of how many people are here, we're going to start in 2 minutes. 10 minutes late is plenty time. And please, please, please take advantage since you're here live. The main thing is questions. So if there's, please stop me at any time so that you can ask questions and I don't get it, or can you go over that again? Whatever. I am very curious to if you guys can see the chat over here. At least someone tell me if you can actually hear me. That would be good to know. All right, it is 8:10, so we're just gonna go on and get it. It's gonna be real awkward if whoever is here says nothing, and so I'm just talking to myself. But it's all good. I'm a teacher, so it's all good. If you don't know, obviously my name is Michael Glass, and I do want to start off with just a simple disclaimer. Whoops. And it simply says, whatever we go over today, the stocks we cover, the strategies, technical analysis, the things I'm going to teach are purely for educational value. If you choose to implement these strategies, if you continue your education, YouTube, however you're going to learn about investing in the stock market, this is at your own risk. Don't come talking to me, a year later saying you lost all your money. So obviously, I'm just going to full disclaimer so that you cannot sue me. Trade at your own risk. So, one of my favorite quotes by Martin Luther King Jr., nothing in all the world is more dangerous than a sincere, ignorant, and conscious stupidity. And the way I take that with the stock market is that there are a lot of people who obviously don't know how to properly invest in the stock market. And despite that, they still invest in the stock market, lose their money, and then they want to know why they're losing money. So, you can be dangerous with a little knowledge, and without the full knowledge, you're going to lose a lot of money. So today we're going to cover about 6 things. We're going to talk real quick about the different types of investing. We're going to talk about technical analysis. We're going to talk about understanding market context. We're going to talk about how to protect your money while investing in the stock market. The choice is yours. Real quick, we're going to go over the different types of investment vehicles, stock, forex, futures, options. I'm not going to cover them in depth, but I do at least want you to know. And then mental fitness for traders is just about, to be honest with you, of the first 5, it's real important to know all that stuff. But the most important thing about trading and investing in the stock market is mentality, your what we call the psychology of trading. That is 90% of it. 10% of it is understanding chart patterns, understanding trading setups, all of that. That's about 10% of what trading is. 90% of it is about mental discipline and being able to follow rules. So we'll talk about that briefly at the end. So I'm really just going to talk real quick about the different types of investing because it doesn't really matter. There's a lot of what I see sometimes on the forum is fundamental versus technical. And what that simply means is at the basic level, a technical trader, and full disclaimer, I am a technical trader, and all we care about is what does the stock look like on a chart. We look at a chart and we make decisions. That is a technical trader. A fundamental trader, they like to look at the financial statements. They like to look at balance sheets, how much cash flow how much earning. You'll hear Jim Cramer talk about that. Sometimes in a Shark Tank, they'll talk about, when they're talking about, well, you're 10 times gross or whatever. So fundamentals, they're looking at the actual numbers of a company, whereas a technical trader, we just look at the chart and say, this is a good buy or this is not. The other type of investing is long-term versus short-term. And basically, the short-term trader likes to take advantage of the up and down moves of a stock, whereas a long-term trader buys and holds. That is the traditional way of getting into the stock market. You buy and you hold, and then whatever happens, happens. That's not me. I'm a technical trader. I'm a short-term trader. However, neither one of them is wrong. Neither one of them right. What's important is how does fit into the type of trading that you're using. And that's where people lose money in trading. That you may be a short-term trader, but you're trading a long-term strategy. You may be a long-term trader, but you're investing wrong. So typically, again, remember what I said, 90% of trading is mental and understanding a strategy, and 10% is the execution. So whether you're a fundamentalist, whether you're a technical trader, whether you're a long-term, whether you're a short-term trader, it doesn't really matter to me. What's most important is understanding who you are as a trader. If you are a fundamentalist, be that. If you are a technical trader, be that. If you're a short-term trader, be that. You have to define your edge. What's going to make you successful in the market? And the way we do that is we make what's called a trading plan. A trading plan talks about your style. It talks about the strategies you're following. It talks about, are you going to be a long-term or short-term trader? It talks about the commissions, all the stuff. It's your business plan. A trading plan is your business plan for trading. And that's, again, that 90% psychology. If you put in the work, you'll be much more successful than the people who don't put in the work. I joked, I had another video that I put out today for one of my YouTube channels, and I talked about the guy here on our forum who, bless his heart, he bought Amazon. It was shaky for a couple of days, but boom, earnings came out, and he benefited from that. That's great. God bless him. That's not how I would trade, because there's no guarantee what happens on earnings. If you're a long-term trader, those people don't mind earnings. They'll hold right through it. If you're a short-term trader, you never hold through earnings, because one bad earnings, or the earnings don't even have to be bad. The results of how people interpret it, like Apple. Apple did not have a bad earning, but people didn't like the numbers, and so Apple tanked. So we rarely do we hold through earnings when you're a short-term trader. But all of that is developing a trading plan. Your edge is your purpose for trading. I trade this. You can't trade everything. You can't be a jack of all trades. You have to get through and define who you are. So that is all the fluff. That is the, I guess, the overview. What we're going to get into now is really the hard matter. This is the stuff that no matter, you can use this to be successful. So technically speaking is where we're going to talk about technical analysis. Again, I said I'm a technical trader. I'm not a fundamentalist. I don't look at the fundamentals of a stock. I simply look at a chart and I make conscious decisions based upon what I see. So technical indicators basically give you a different way to look at the market. You can look at the bottom, and I'm going to pull up a couple of charts in a second. They basically allow you to give you an alert to say, hey, something might be happening in the price action based upon what you see in a technical indicator. Some traders use these indicators to confirm what they believe is going to happen. And so they confirm that this is a time to get into a stock. They confirm it's time to get out of a stock based upon what the technical indicators are telling them. There are basically about 3 different ways to go indicator. One way is to determine, is this stock overbought, meaning it's too high, or is it oversold, meaning it's too low? And I gave a couple of examples there. Bollinger Bands, Keltner Bands, stochastics. Those are all indicators that help us determine a state of that stock. Some other indicators are just about support and resistance. And finally, some indicators tell you what the market is doing and how the market is feeling about each day. So let's go ahead and pull up some charts and we'll talk about that. Now, before I do that, I'm going to pause for a second and change what I'm sharing. All right, 1 second. I'm just changing which window I'm sharing. As I think I mentioned before, this is the first time I'm using Google Hangout, because initially there was this much bigger list of how many people were going to be here, and so I thought I need a bigger room. Really could have stayed simple. All right, so again, I don't know where you guys are, so I am going to start kind of slow or at the bare minimum, and then we're going to build from there. I do not have a chart up yet, but this is just a blank sheet, piece of paper, Google drawing. And, you know, the main thing is, you know, being the identified trend. Trend is, if you can identify a trend, you are percent ahead of most traders, because most traders, a lot of traders don't even know anything about the trend or don't care about the trend. They, you know, especially a fundamental trader, you know, they just buy the buy and they don't really realize whether or not they're buying in a good place or they're selling in a good place. So the first thing that, you know, is just to go with the obvious. And again, it would be real nice at this point if somebody could type in and say what type of trend do they think this is, or which direction. If the stock started here and it ends up here, what trend, what direction is this stock going? And I don't know. So I see the group chat and I've typed into it. I'm not sure if you guys see the group chat. Ah, all right. I see. I see you guys. I opened up a different window and I think I see something. All right, so where we are now that I see you guys are in the question and answer area, the question I have right now is, do you think we are in this stock, is it in a uptrend, a downtrend, or a what we call sideways trend? I'll see where you guys are chatting. Using this as a model, what do you think? You know, a lot of times what we do as technical traders is we draw channels. Okay, I see at the top. Yes, obviously that's an uptrend. All right, so now I know that this is going from the top to the bottom. All right, and that was Jared. Thank you. Yes, obviously that's an uptrend. And if we do the reverse, where we're simply going down while I'm giving the answer, that's a downtrend. And again, a lot of times what we do as technical traders, we draw channels to highlight these points. This stock obviously is in a downtrend. And then sometimes we have this going on. And on this one, this stock would be in no trend. It's what we call a consolidating channel pattern. Okay? Now, the reason why that's important is this. We're going to pull up some charts now. I'm going to change windows again. Pull up some charts and see what you guys think. Let's make sure we got the right ones. There we go. All right, do you guys see a chart of Apple? Now, I'm using this website because, again, I don't know where you guys are. I don't know what you guys have access to. So this website is called freestockcharts.com, and I use this for my free videos that I put out every week. And so if you don't have a broker already, if you don't have a charting platform, this is the place where you can go to get free charts. Now, you can't invest, but if you just want to analyze and look at stock charts to get an opinion, especially in the beginning where you should be trading, you should be learning, this is a great resource for that. Again, it's freestockcharts.com. So first up here, we have Apple. Now, if I show you Apple from this standpoint, and this is basically showing you the last 4 months. Oh, remember we have three. We have uptrend, we have downtrend, and we have channeling sideways. What is Apple doing right now? Is it in an uptrend? Is it in a downtrend? Or is it going sideways? And the way I'm seeing your answers, because again, I guess the way it's going is there's a question and answer app on your side, and if you click on that, it says Q&A, and that's where you can type in. Really, what it is you type in a question, and I'm answering it. I think that's how it's working, because I basically see all your questions, which are really all your answers. Again, first time using Google Hangouts. The question was, looking at this Apple chart, is it in an uptrend, is it in a downtrend, or is it going sideways? Of course, I should say, I'm assuming you guys can see it. Let me make sure you guys can actually see it. Yes, you can. Okay. And for you, if it's the same as for me, over on the left-hand side, you should see a Q&A, and that's where you can answer the questions that I'm posing. Or maybe if I disable the question and answer, maybe that's when you'll see chat. Let's see. I'm just going to do one thing real quick. Yeah. Let's just roll with it. I don't keep pausing. All right. So right now, just looking at this, we would say Apple is going sideways. However, of course, if I go into a larger view, we can see Apple is actually in. We look at it for the past year. Now, what's important about that is it's what we call multi-time frame agreement. Apple's in an uptrend, great. However, in the short term, Apple's going sideways. So what I would be looking to do is, and you can see it already happened when we're talking about support and resistance, this channel, is that I would be wanting to buy Apple the next time it came to support. So the next time Apple came around here, because it's in a long-term uptrend, I would probably be still interested in buying Apple because it's coming close to a support. Now, again, does that mean it's absolutely going to go up? No, but it's defining our edge. It's putting us in our percentages. I'm not sure how many of you guys like to watch poker, but every now and then I like to turn on poker, the World Series of Poker on ESPN. Fox Sports has poker on there. And anytime they show it, anytime they show the players' hands, right next to their hands, they always show a percentage. You know, if it's a race, it's like 60 to 40, and then, or if it's a pair and the other guy doesn't have anything, it's like 95 to 5%. Trading is the same way. You need to know your percentages. If you trade with the trend, your percentage of having a successful trade is much better than if you're trading against the trend. Let's go to the stock of the week, which was Amazon. Now, Amazon long term is in an uptrend. You can see it started here and busted on out. This big arrow basically is, Amazon reported Thursday after the close. This is when Amazon reported earnings on this day. And so Friday, Amazon went up about 80 points. So whoever that was that got in there, bless his heart. But the important thing for you to see is Amazon's in an uptrend. And so is this a good place to buy Amazon? 555. To be honest with you, and again, I don't know who that guy was, but where he bought it Amazon, because he bought it Amazon this week, at least according to his post, this wasn't a good point to buy Amazon. Regardless of the earnings, we don't want to buy at the top. We want to buy at the bottom. So in an uptrend, if we go back to, well, let's go back to Apple for a second. All right, so if I draw my trend line, remember we talked about that with Apple. There's my line going up right there, okay? So this is my uptrend. I don't want to buy, let's do another one. And I'm just doing it real quick. So there's my channel. You can kind of see Apple over the past year just going right through here. Sometimes it broke through, came back down, broke through again. Now it's going sideways. My point is, when you're in an uptrend, you want to buy at support. Support is the bottom of this channel. When you buy up here, you're at a higher risk. So if we look at this little, what happened right here, did this person make money? He sure did eventually. But what happened? First price went down. They probably got stopped out, or they're probably, stressed out to heck. And then it finally went up. In the first place, then you don't have to worry about riding out this wave. You're buying at a good logical place to go up. That doesn't mean it always works. Sometimes you buy a support and it breaks through. Like over here, broke through support over here. Every trade doesn't work. But what we're talking about is coming up with a plan, a trading plan, coming up with a system so that you can be successful. So rule number one, when we're in an uptrend, and that's what the market is right now, is that we want to buy a support, sell at resistance. So if we go back to Amazon, again, just zooming into what just happened, for me, I would be looking to buy a support. Here's how I draw a support. I'm connecting the bottom of these lines. So this was the optimum place to buy Amazon right here. When you buy at a bad location, but it's, if you know anything about real estate, they say you make your money when you buy your house, not when you sell your house. So if you buy it at a good price, then you have more wiggle room to sell at a good price. And it's the same thing for selling in a downtrend. Again, if you see the Q&A, if you have a question, feel free to interrupt me. I'm just going to keep on moving because right now nobody's asking any questions. If you're like, I see a couple of you found it. I know Jared found it. Wesley found it. There's a couple people who have found it. I'm sorry, Westner, not Wesley. SP found it. There is a Q&A app. For me, it's on the left-hand side. If you have questions, go to that. Now, for me, at the very top, there's also a chat app. Said you didn't see that, so I see the question and answers. But I'm just going to keep on keeping on because right now nobody's asking questions. I'm going to go on to Facebook. So long-term, Facebook is in an uptrend. So again, we want to buy at support. Well, where's the next good place to buy it? Well, there's a couple places. You can see these moving averages, and I'm going to talk about those next, but they can act as support and resistance. So you can see this green line, that's the 10 moving average. That's really a small number. You typically don't like to use that. But you can see usually when Facebook comes to this 10 moving average, it bounces while it's in an uptrend. So for me, I would want to buy Facebook the next time it comes down to this green moving average. I wouldn't want to buy up here when I'm way away from the moving average. I want to buy it down here when it's close to moving average. Google in an uptrend. Zooming out a little bit. Really, Google is going sideways. I mean, it is starting here, going up there. But this is, again, a little bit out of whack because Google had earnings last week. Google had earnings last Thursday after the close. And you can see Google actually did $100 in one day. Here it is right there. 564, and it went up to 572, but it closed at about $90. But on this earnings reaction, and I'm probably going to talk out of both sides of my mouth right here. So people might be saying, well, why in the world would I have a rule not to hold through earnings when I've just showed you two earnings that skyrocketed? But they don't all happen like that. Because again, I'll go back here. Apple, this big red dot line right here, that was earnings. Their earnings was pretty good. So if you bought Apple just for their earnings, you just lost a lot of money. You don't know how earnings are going to come out, and more importantly, you don't know how people are going to react to earnings. So unless you're a long-term investor, you usually do not hold through earnings. What I would have done is I would have got out the day before and then let earnings happen and then trade what I see. Again, as a technical trader, you're trading the charts. You're trading what you see. You're not trading the value of the company. And here's another good one. Goldman Sachs is a big bank. Drawing my trend line. I'm matching up the candles. Whoops. So there's my support. So if Goldman Sachs is in an uptrend, the next time I want to buy is the next time Goldman Sachs comes down to this line. Look, hits this line, goes up. Hits my white line, goes up. Almost comes back down to the white line, goes up. Comes back down to the white line, goes up. Even on this big red day on Friday, what did it do? It came down to the white line. So buyers are coming in on this white line. So the next time I want to buy Goldman Sachs, and again, the point I'm trying to make is when we buy, we want to buy at support. When we sell, we want to sell at resistance. You just don't want to buy what we call open space. There's no reason to buy Goldman Sachs right here. This is an open space. It could go up, it could go down. Who knows? But if I buy here, I know that I'm buying at a good location, at a good price, and I could take advantage of this full move up. The person that bought here eventually made money a couple of days later. Barely. Look at this person up here. Anybody bought up here, how are they feeling right now? They're probably shaking their boots off right now because, you know, the price has not returned to this level. Came back down. What we call this is, you know, retail traders, you know, newbies, you know, buying just because Goldman Sachs is going higher and they're not buying for a purpose. A good example would be, you know, again, we have our moving averages acting as support, and then eventually, though, it broke through. So that's all I want to say about uptrends and downtrends. I didn't really go over too with a downtrend. I do know one has a downtrend. Gold has a downtrend. So with a downtrend, it's just the opposite. Now I'm drawing resistance, and now I want to sell the stock anytime it comes to resistance. I don't want to buy here. I want to sell each time it comes here. Another one with a downtrend is crude oil. And again, I want to sell. So the main thing I want to make sure you guys understand is when you look at a stock, are you able to look at it and tell, is it in an uptrend, is it in a downtrend? And once you know that, then you need to understand that the rule is, in an uptrend, I want to buy it, support, I want to sell at resistance. If you know that, again, you're 10 to 50% ahead of most people because somebody bought right here. That was somebody. I don't know who, because for every transaction, there's a buyer and a seller. So somebody just got ran over. They bought at a bad location. These were the proper places to buy. So, that information alone, if you're new to trading, sets you worlds ahead because you're buying a good location. Think about the stock market just like real estate. Location, location, location. You want to buy at a good price. You want to sell at a good price. I'm just looking at my notes what I wanted to do next. Okay. I mentioned this earlier, and this is I guess taking it times two. Remember what I said. Yes, we want to buy support. Yes, we want to sell at resistance, but we also want to look at the long term. So if I change this chart, let's go back to Apple. And I look at this chart, and I'm going to switch it from right now, we're looking at a daily. Let's go to a weekly. You can really see now on this chart, Apple is still in a nice uptrend. So this is long-term, Apple is going up. And so what we want to do is we want to take these longer time frames, these weeklies, and then there's monthlies. You want to identify the trend and say, once you say, all right, I know Apple's is in an uptrend, then we go down to a smaller time frame, like a daily, and we find the location to get in. So this would be a good time to get in. I know that I found support at the smaller time frame. So it's called multi-time frame. Yeah, there are a lot of websites. The question is, are there places to practice buying, selling? It's called practice trading. They're called virtual trading. It's called simulated trading. A lot of brokers will allow you to do that. It really depends on what type of investing you want to do. If you just want to do stocks, there are almost all of them will allow you to do that. Now, like I said, this website here, freestockcharts.com, gives you the charts for free, but there's no buying and selling. Now, to be honest with you, you don't really need. I can say I want to buy at this price, and when the stock actually gets there, all right, I'm in the trade, and then you can monitor it that way. But if you actually want the what do you call it, the simulation of actually placing an order of buy and sell, I'll put my email up at the end. You can email me the same question, and I will I'll email you back with the ones that I know of. I'll be honest with you, stocks is how I got into trading, but I really don't do as much stocks trading because I'm looking for more leverage for my money. But I can definitely point you in the right direction. Great question. All right, so if anybody is paying attention, or more importantly, taking notes, rule number one: identify the trend. Are we in an uptrend or are we in a downtrend? Rule number two: marry, confirm multi-time frames. Start with a long time frame. Really, when you're identifying a trend, you can start in a long time frame and find locations on the smaller time frames. That's how you can, again, increase your probabilities of winning a trade. Now, the last thing I want to do is pull up just an empty chart. And I want to talk indicators real quick. Now, and I want you to notice one thing. I went over all of that and then really didn't use technical indicators. I don't really use technical indicators that much. I believe that you should use price action, just what you see in the chart. But there are people who use them, and because of that, I think I should at least give you a brief overview. All right, so I'm going to go back to Apple. What I have up for you are 3 technical indicators, and this is Trading 101. And what I mean by that is these are the 3 most popular, widely used indicators. This top one is called MACD, Moving Average Convergence Divergence, MACD. This middle one is called RSI. There's RSI, but it's basically RSI, Relative Strength Index. And down at the bottom, we have stochastics. These are the 3, the history of technical indicators. These are the 3 ones. I don't really use them. Again, I tell you I use price action. But even when I do use technical indicators, I don't really use these. But if you want to talk about most traders, especially people who are trading stocks, This is what they use. And it's real simple. Stochastics tells us overbought, oversold. When we're down here below the red line, we're oversold, meaning it's gone down too much. So when they start to angle back up, you want to buy. So let's look. We got our first signal right here, but we actually crossed and came out of the red right here. So if I bring my cursor up, this is where stochastics gave a buy. And if you look, you could have bought at 124 and you could have sold at 124, 125. You could have made about $1. On a stock, that's okay. It's not that bad. And then right here, we basically got a sell signal. So what we're looking for here is we have these moving averages on stochastics. When they come down into the red, that gives you something's about to happen. And then when they come out, that is your buy signal. Right here was your buy signal. Now, some people will trade this stuff down here, but the rule is when it comes out of the red, that is your buy signal. When it comes out of the green, now they both never got up to the green, so you never got a sell signal. Same thing here on RSI. RSI, once we come down into the blue, that's a buy signal. And when we come out, that's a sell. So we've got a buy signal here on stochastics. We got a buy signal here on RSI. So that's two buy signals. Have at it. MACD is just these two moving averages. And when the short-term moving average crosses above the long-term moving averages, that's a buy signal. So right here, you can see they intersect. That we get that cross right here. This, whoops, sorry. Let's zoom that back in again. So we got a buy here. And here. So there's our three. It was a very famous system called 3 arrows up. 1, 2, 3 technical indicators all saying up. This is your buy signal. And they all would have pretty much. Now, MACD, you can see it's a little late. Stochastics got us in first. RSI got us in second. MACD is a little bit later. By matter of fact, by the time MACD gave us a crossover, you only had like a one-day up bar there. Let's look at another one. And the reverse is true on the top. When we come out, that's a sell. When we come down, that's a sell. When the long term crosses over the short, that's a sell signal. Let's go to Amazon. So on Amazon, we got a buy signal here on stochastics. Coming out, we got our crossover. We got a buy signal here on MACD. Once again, RSI. MACD is a little bit late. So if we would have bought here, here's our buy. 530, and you could have sold at 536. You actually get to crossover here. So this one, if you follow stochastics, you would have sold at 534. So $4 profit on that. And again, depending on your investor, if you're a short-term investor, $4 in a week is great trading. $4 in a week is great for a short-term investor. Let's do a new one. Let's go down here to Netflix. All right, so we get our first crossover here. We get another one here, stochastics. We get our first one here, and we get another one here. We get another crossover here, but it really wasn't below the blue line. You prefer for it to be below the blue line. And MACD actually is with us at the same time as this stochastic. So that's 108, and you could have sold at 109, so about $1 in there. Again, for short-term traders, $1 profit is great. So again, the way we use technical indicators they give us confirmation, and sometimes they can give us signals. What we're looking for, this is stochastics. You're looking for the crossover. RSI, you're looking for the crossover. MACD, you're looking for a crossover, but you don't necessarily pay attention to these overbought and oversold. Again, oversold means it's been sold too much. That's down here. Overbought means it's gone up too high. Oversold on the blue, overbought on the red. MACD, we're just looking for crossovers. So that's really all I wanted to say. if I show you right here, there are a ton of technical indicators. And that's why I'm not really, and obviously I don't have time to go over all of these. I gave you the 3 basics. I also gave you categories for them. I will take a moment real quick, since I did talk about it in the presentation. Bollinger Bands, they basically wrap the stock, and there's 2 ways to trade them. You trade it when it touches the high, you sell. When it touches the bottom, you buy. Or when it breaks through, I'm not sure if you can see this. When it breaks through the band, that's a buy signal. You can see they really work well right there. Here it worked. Or when it breaks down to the bottom side, that's a sell signal. But this is a good example why I don't usually use technical indicators, because they don't always work. Technical indicators are mathematical calculations against the price. So why not pay more attention to the price? They're just mathematical calculations, and they're good and they're bad and they're nice, you know. But again, everybody's made their versions. There's so many. And like I said, I gave you the 3 most popular: MACD, RSI, stochastics. If anybody has any questions, go ahead and type it in there. Otherwise, I'm going to go back to the presentation and we'll come back to charts in a little bit. I'm going to go ahead and change. Whoops. And we're going to go back to the presentation. So as I just said, price action is king. Yes, technical indicators are good, but what the uptrend, downtrend is all you really need to know. It really is. You know, you can, again, use technical indicators to confirm, but the price, those charts, they tell you all you need to know. What happens is people, they fall in love with those technical indicators and they trade more. If you saw with the MACD, sometimes the MACD was late. Well, if you're trading MACD by itself, you're getting in late, you're losing money. Sometimes they forget about looking at everything else in indicators and forget that other things can happen. And finally, one of the things I really see is some people use way too many indicators. I followed this one guy when I first got into futures trading, and he had like, his charts looks like spaghetti. He had like 10 or so Zaw Jenkins. That's funny. I'm sorry. He had like so many so many okay, somebody said you have to change from showcase to Q&A from the menu at the top of the video in order to get the chat room. Okay. Totally threw me off my game. Sorry. Okay, so technical indicators, you know, some people use too many. Some people fall in love with them and just trade technical indicators. There's more to trading than just technical indicators. So the reason why that's important is the biggest thing that people forget about, like I said, is that there's more to trading than just indicators. You have to first, when you get into the market, it's just like waking up for the day. One of the things what do? You turn on the news and you want to know, is it going to rain? Is it going to be sunny? Is it going to be windy? Is it going to snow? That's the first thing you do in the morning. When you be trading, it's kind of the same way. You have to check the forecast. And you want to identify what type of day is it going to be. Is it going to be what we call a narrow range day? A narrow range day is when the market is just going up and down in a small amount of points. Up and down, like the NASDAQ. A good day for the NASDAQ is 30 points. If it's just going up and down at 10 points, that's a consolidation day. A good day on the Dow Jones is 100, 150 points. If there's only 30 points in the Dow Jones, that's a narrow day. A trending day is obviously a day when the market is just trending, either up or down. I don't care. You can make more money going down than up because of fear. All the people who bought are now scared, and so they're selling, and that fear pushes the market down. People can hold forever to go up, but when the market starts going down, it will go down fast because people are panicking and they're selling, pushing the market lower. Volatile days are, news days. This week on Wednesday is the FOMC announcement. And what that is basically they're going to announce whether or not they're going to raise interest rates, which affects mortgages, credit cards, loans, all that stuff is affected. The dollar would be affected by interest rates. So that's going to be a volatile day. It may go up 100 points and then down 300 points. It happens at 2 o'clock on Wednesday. We also have GDP on Thursday. A breakout day is when the market is in a range, like number one, but it breaks out of that pattern. So just to give you a real quick we will go back to our, where'd it go? There we go. There it is. So to give you an example, this day right here, this would be a narrow range day. The market is just going up and down, up and down, up and down. But there's money to be made there, especially for a short-term trader. A short-term trader is just going to buy here, sell here, buy here, sell here, because it's a narrow range day. The range of if the range of this day is like 50, I can't. Then you're just going to buy side here. A trending day is when the market's going up and up and up. There is no range. Same thing for down. We can trend down too. A volatile day is a day where we may go up, and then usually some type of news comes out, and then we just tank, or the other way around. A breakout day is once we start trading like this, and then now we go out. That's a breakout day. We traded in a range, and now we're breaking out of that. Make sense? Let's go back to the presentation. All right. So what can change the forecast? Usually it's economic data, earnings. We saw with 3 stocks today, Amazon had earnings, went up $100 about. There was another one. Apple had earnings, went down. Netflix had earnings. It had a big day. I'm forgetting one. Facebook. It could be a stock could be in a downtrend, and earnings come out and go in an uptrend. So again, another reason why we don't hold over earnings, because they can change the forecast. See coming out on Wednesday. We just had a huge basically 3 days of down action. Friday, the market really went down. We could continue to go down Monday and Tuesday. But if the FOMC, the Fed Chairman Yellen, if on Wednesday she says we are not raising interest rates in 2015, watch the stock market take off to the upside. You've got to be aware of that, And that's why, again, we sit our hands. We sit on the side. Every Thursday, we talk about jobless claims. As a matter of fact, the jobless claims on Thursday of last week was the lowest it's been since 1973. Again, for those of us who voted for President Obama, they talk about how horrible the economy is, but the stock market has doubled, and obviously unemployment has gone down. Payroll comes out the first Friday every month, so not this upcoming Friday, but next Friday you're going to hear the job numbers for July. So basically, the first Friday of every month, they give you the jobs number for the previous month. How many new jobs were created? Definitely can move the market. And you never know when somebody's going to speak and say something. Right now, one of the things affecting the market is a Greece bailout. What does Greece bailout have to do with America? But it does. It affects the market. The market will tank. The market will rally based upon if Greece accepts the bailout. You have to be aware of those things, whether you're a long-term or a short-term trader. So that's really the technical side of trading. I'm going to go through this next part real quick. We've already been here in an hour, and I'll stay as long as you guys want. I'm almost done with the presentation. Any questions that you have, I'll be happy to answer anything more specific to what you were looking for. Again, I didn't know who was here or who you guys are and how beginner level I had to go or how in-depth I had to go. So if there's more in-depth questions, you can ask them at the end there, and I'll go that. But I really did start, low, and we'll see. One of the things I think most people who I've worked with, the reason they lost money is that they don't have stops. A stop is how you protect yourself. The golden rule of trading is cut your losses and let your winners run. But what people do is they cut their winners. They're happy making $1, but they'll take a $10 stop loss. Well, that doesn't work out. One trade will wipe out a week of good trades. Because you're allowing yourself to lose more than you win. You've got to know what we call your risk to reward ratio. I'm going to make 5. And how do we do that? Support and resistance. If I get in this stock, I know at support, then I want to buy a support so I can have a small stop. My reward is to go to the top of those channels. And so I do believe that once, and to answer another question here by Zaljikas, I just saw it. I do believe this is being recorded automatically. And if you come back to the link that you used to get here, it will be the video. It will be the video. From what I saw, you just have to come back to the exact same link, and it will just play from there. To get over that. So let's keep going. So we use stocks basically to limit our losses. When you get into a stock, you have to have a purpose. And I'm going to we're going to go back to the charts in seconds. Sometimes people use stocks to get into trades. But in essence, what the first thing you want to do is identify the trend. This is a down move. So what do we say in a downtrend? We want to sell at resistance. So if I want to enter a stock here, I'm going to put my stop above this line. It's what we call hide your stop. So if this stock goes above this red downtrend line, then the trend is over. Get me out. There's no need to stay in the stock because the reason I'm selling is because I want to take advantage of this downtrend. But if it goes above this downtrend, it's now an uptrend. So that's where we hide our stops. And you don't have to put it way up here. Just once you draw your lines, your trend lines, your support and resistance lines, you say, once it goes past this line, I'm getting out of the stock. So my risk is, let's just say that's $1. Where my reward is, well, the downtrend line will be right here. So my reward is, I wanted to go all the way down here. So I'm risking $1 to make 5. That's a good risk to reward ratio. What bad traders do is they're willing to risk $5 only to make 1. And again, one losing trade, because we're not going to win on every trade, one losing trade will wipe out all of your winners. I'm just scanning over to make sure I didn't miss any other questions. Okay. Did someone share the different types of trading days? We talked about that. Also, we got some great things over here. If you guys are looking over here in the Q&A section, Zod is posting a lot of good links here for you guys to check out. And I didn't realize this, but there was a good question that I actually did answer. Are stocks more likely to go up or down if the Fed raises interest rates on Wednesday? They're more than likely the stock market will go down if the interest rates are raised because the dollar will go down. The market does not want the interest rates to go up. So if the rates go up, as a matter of fact, 2 weeks ago when Chairman Yellen made a statement about interest rates, she said interest rates will go up before the end of the year. The market went down. So the market will go down probably. I mean, this is just my opinion. If the interest rates go up, and I don't think they will go up on Wednesday, but I think the language is going to say that they will go up. But I don't think they actually will. I think they're going to stay the same. All right, so how do we use stops? How do we get into a trade? First thing, identify the trend. After we identify the trend, do your support. So we said this is a downtrend. Draw your support and resistance lines. There's a line. There's a line. Place your stop behind those key price levels. So behind these support and resistance lines, there's your stop. Mistakes that people use is they put, or they do them backwards, or they ignore. Again, news overrides everything. And for those people who were holding over earnings, again, if you're a long-term trader, have at it. But if you're a short-term trader, news overrides everything. You could be in a downtrend, but news comes out, and now it's an uptrend. You could be in an uptrend, bad news could come out, and then now it's in a downtrend. So, you know, again, I just think you need to be very careful when you are holding over earnings. This actually happened to me on Friday. I forgot I had a stop in, and I got into a trade, lost $100, but I made $200 at the end of the day to cover that up. I was supposed to be done for the day. I was like, oh, I stopped. All right, so let's go back real quick. Anybody over here who's participating, give me a stock, and let's do a let's walk through the steps and say if we want to buy, if we want to sell, where we will put our order in, where we place a stop. So we're going to go back to free stock charts. And give me a stock that you guys want me to do a quick technical analysis evaluation on. And we'll go through the steps. Basically, what you want to do, and I talk about this in my video today, at the end of the day, basically open 9:30 to 4 o'clock. The traditional stock market, some things are open 24 hours, yada, yada, yada. So at the end of the day, I come, it's 5 o'clock. What you want to do is what I call is you want to create you begin your trading plan. So if the market, I want to have, if the market is up tomorrow, I want to have 10 stocks that I want to look at if the market is up. If the market is going to be down, I want to have 10 stocks that I want to get into if the market is down tomorrow. So then when it happens tomorrow, I'm already ready to go. I'm not looking for stuff. I've already created the stocks that I'm looking for. So I'm going to scroll up and down here to see if anybody said anything. If not, I'll just throw out a stock. Let's see here. Did anybody throw out a stock that they want me to look at? Cisco. Okay. Let's look at Cisco. I have never traded Cisco. And we got Volvo. So Cisco and I think Volvo are the two that I see. All right. So let's pull up Cisco. Well, let me close this up a little bit so we have more room. All right, so the first thing is, what is Cisco? Is it in an uptrend or is it in a downtrend? First thing I would do, I come over here. Looks like we got some support right there. So let's be fair. Long term, looks like Cisco is in an uptrend, right? Long term. Over the past year, it looks like it's in an uptrend. Let's go to a weekly. Yeah, I still say long term it's an uptrend, but you could also say it's just kind of sideways. Let's go back to the daily. All right, so if it's in an uptrend, what do we want to do? If a stock is in an uptrend, right? Even if this is even if it's sideways. Okay, I also see Walmart in here also. WWE. WWE has earnings this week. I don't know if you know that. And of course, WWE is going through all that Hulk Hogan stuff. But WWE has earnings, I believe, on Thursday. And if I recall correctly, their past couple earnings have not been that good. But anyway, that's another story. All right, so Cisco is going sideways to up. So we want to buy at support. So is this a good place to buy Cisco? No, you're buying in space. Not only are you buying in space, I can make an argument that you're buying at a resistance. And I can say this is what we call a falling wedge. This is actually at resistance. Now, if it breaks through, I still would want it to come back to support. The ideal place to buy Cisco is right here. Look at how many times Cisco came in to $26 and bounced. Bounced 1, bounced 2, bounced 3, bounced 4. I'm going to buy Cisco right here. I may even want to buy Cisco down here to get this long-term uptrend. But this 200 moving average, I didn't talk about moving averages. I'll do that at the end. I will pause for 1 quick second. I apologize. Stochastic, RSI, MACD, technical indicators, also moving averages. And the reason why people like moving averages is that they can act as support and resistance. They can also tell us the direction of a trend. So moving averages, I personally, when I look at them, and I don't look at them much, I look at the 20 to 50 and the 200. The 20 moving average, the 50 moving average, and a 200. And I do use exponential moving averages. Exponential moving averages weigh what happened recently more than it does what happened at a long time ago. So they give it more weight. So for Cisco, I would consider buying it, but I would buy it here or I buy it here. So if I wanted to buy it at 26.80, where would I put my stop? I would put my stop down here around $26 because even this long wick here is at $26 and the long wick here is at $26. 80 cents. If I buy here, my stop is at $26 because of this wick here. Buyers came in right here. Buyers came in here too. What's my reward? My reward is $28 because this is a downtrend. So I want to stay in this till it gets up here to $28. So I'm risking 80 cents to make about $2.40. So that's about a 3-to-1 ratio. That's pretty good. I'm risking $1 to make 3. That's a good risk to reward ratio. Make sense? All right, so another one, I think this next one I saw was Volvo. Is Volvo even a who makes Volvo? Is that Ford? Who makes Volvos? I'm going to skip it because I don't know who makes it. All right, let's go to his WWE. All right, so long term WWE is in a side trend. I wouldn't call it an uptrend. I wouldn't call it a downtrend. But what I do see is that we've got resistance right in here, and we've got support here. Went down here a little bit. I'm going to close this up a little bit. What would I say with WWE? You also have some support going on right in here. So where do I want to buy WWE? I want to buy WWE at 13.20. I certainly don't want to buy it here. This is resistance. I would be selling here because it has not gotten out of here in a year. You might have, so in my opinion, we've already seen the run up. I hope you're already in it. But we do have earnings coming up, I believe Thursday. But if I wanted to sell it, I would sell it at $18. And I would put my resistance, somewhere up here. Let's say 1875, something like that. And I would hold to at least 1560. At least 1560. You can definitely make an argument that there's something going on right here. So that's $2, $2.50. But I would really love to go all the way down here to $13. This would be my first target, and this would be my second target. But so if I was selling, I would be selling at 18. And so that's a $2, so that's like a 2-to-1 ratio, 2.5 to 1. That's okay. It's not great, but that's okay. That's what I would be doing on WWE. It's consolidating. There's no real trend. So at resistance, so I would be selling. Now, I wouldn't be selling right now because WWE has earnings. So I would be out of it. I would not be getting in this week because of the earnings this week. The other stock I saw was Walmart. All right, so what's the trend with Walmart? Immediately, I hope we can see the downtrend. So let's mark this off. Let's mark this downtrend off. I'm always amazed at how beautiful these trend lines are. If I'm going to sound geeky, that's about as geeky as I'm going to get. But it's just amazing to me how these things work. But that's the psychology of trading. People do follow these lines. Look at this beautiful downtrend channel that Walmart is in. Now, long term, let's see if I go out a little bit. Yes, it did have this breakup going on here, but now it's come right back into, this is the range it was in for a long time. For some reason, maybe earnings, I don't know, it took off, but it's worked its way all the way back down. But look how beautiful that downtrend is, man. That's beautiful. So what do we do in a downtrend? We buy a support, we sell at resistance. We buy a support, we sell at resistance. We buy a support, we sell at resistance. But here, it took a long time to get over there. We sell at resistance, we buy it, and we get out there. I said that backwards. So this was a beautiful place to short right here at 73.80 when we came over here. So my target would be to come all the way down here, extend this out. I can't do it on this chart, but extend this out. It's probably somewhere down here in the 60s, That would be my target. But we're in a clear downtrend. I don't know when Walmart earnings ends. I think Walmart already had earnings. I don't know. I really don't know, so I don't want to be a liar about that. But you can see we're in a downtrend. I would be shorting this. But let's just pretend this didn't happen. Let's just go with what happened. Again, we're walking through what we call trading plans. So at this point, I'm shorting at 73.80. I'm going to put my stop right around here at 74.80. So I'm risking $1, and my goal is to get all the way down here to 71. $70. So I'm risking $1 to make 5. That's great. That's a 5-to-1 ratio. That's what I would be doing No, no, no. Like I said, I said it backwards. In a downtrend, we want to sell at resistance and we want to buy at support. I did say it backwards. I absolutely did say it backwards. So that's that's what I see on Walmart. Before I go back to the presentation, does anybody have another one they want to look at? I think that was all of them. Let me scroll, make sure. Walmart, WWE, we did that. Yeah. Whoever put in Volvo, do you want to put a different? What auto dealership makes Volvo? Is it Ford? Is it Chrysler? I don't know. All right, so let's go back to the presentation. Where is the presentation? There it is. All right, so what I'm going to do real quick is all right, so the choice is yours. You can get with this or you can get with that. You know, the advantage of stocks is that everybody knows them, more people trade them. So there's a rationale for them. You know, most people don't know about or don't want to take the time to educate themselves about stocks, options. The advantage of options is the leverage. So for example, Google, we just saw is at $600. Well, to buy one share of Google is $600. Some people don't have that amount of money. But an option on Google might cost you, let me see if I can pull this up. Let's stop yet again, and I'll show you an option. There we go. And let's go to trade. Oh. Okay, well, maybe not. My Thinkorswim platform just went batty, so I'm going to restart it. While I'm doing that, I'll just keep talking and go back to this while that's restarting. Is basically the price of an option is a percentage of the actual price. So where Google is $600, to buy the option in the money might be $6. So obviously you can buy more contracts, where if you buy shares of a stock, you buy contracts with options. So you can leverage. Now leverage is good and bad. So that means you can make more money, you can lose more money also if it goes against you. But the other negative of options is deltas. The Greeks, there's delta, there's theta, all this stuff that I don't really care about, and that's why I don't necessarily invest too much in options. And I want to be clear, I am not referring to binary options. Binary options is a new thing. I spent like a day to look at it, and up on YouTube and other places was a real spammy. It was real, hype pumping stuff. And so I don't know about binary options. Binary options is supposed to be, do you think the stock is going to be up or down in 5 minutes? And you can do that. You can do it in 1 minute. Will the stock be up or down from here in 1 minute? I stay out of that. But there's a real good cool thing with options called condors. Iron condor, debit spreads. And what's great about that is that And this is what I do for, I did this for my parents' account. It's what I plan on doing for my retirement accounts. It's basically, you know, traditionally when you think about the stock market, you make money if it goes up or down. Options, you don't want to, you could care less if it goes up. Basically make a range. I'll switch one last time. What's great about what we call debit spreads is, again, if I get rid of this one, one second, where is it at? This is the whole, not using Google Hangouts before. All right, so in this example, here's a stock that's going up and down. With a debit spread or with an iron condor, you can say, let's just say this is 100. We're going to say this is 100. And we're going to say down here, this is, I don't know, let's say 75. So resistance is at 100, support is at 75. As long as this stock stays in between, it can go up, it can go down, whatever. As long as it stays in between here, you make money. Now, it's not as much money as you would if you were just trading a stock, but think about that. And now they have these things called weekly options, which is great. It used to be you had to wait a whole month, but now you can do it every week. And if you find a stock that's doing this, there's some stocks that don't move like this. And you can just say, listen, as long as the stock stays in between, and you can say, you can have as wide as a range as you want. The smaller the range, like if I, instead of 75, if we did it right here, it said 90, they'll give you more money. If you choose a real tight range, they'll give you more money because you're taking on more risk. But if it's a real big range, they'll give you less money, but it's safer. It's safer, and that's what people use for, you know, some people use it for monthly income, some people use it for retirement income. But if you want to look more into that, and I do recommend this. They're called debit spreads, specifically in iron condor. If you want to know one type of option to consider, they're called iron condors. Remember what I said. I'm really just trying to give you guys surface information on these more in-depth stuff. And if you guys want, we can get together again at another time, and I can go in more detail about options and spreads and stuff like that. But again, we've already been here an hour and a half, and so I don't want to take up, or my time for that matter. All right, futures. I'll be honest with you. I love futures. I love futures. Again, you get the same leverage like you do with options, but you don't have to worry about the Greeks. One thing about options is, if I take that scenario again, with options where it's going up and down between 175, because of time decay, even if it stays in the same range, an option can go to the same price and have a different value at the same price because of time decay. Well, with futures, when it goes to a price, it's that price no matter what. That's why I like futures over options for day trading. And 24-hour trading, you know, one of the things I hated about stocks was, you know, a lot of times with earnings, if you wanted to trade earnings, to get in the day before when anything could happen. A lot of places weren't, when I started trading back in 2000, you know, a lot of places weren't allowing you to trade pre-market and after market. Well, futures trade all day, every day. Well, they close end of Friday and they open back up Sunday. Great liquidity. The thing about a stock is, in order for you to get out, stocks like Apple, Amazon, you know, they've got a lot of liquidity. You can get in and out. I don't know about WWE. I don't know how many volumes of shares are traded on WWE. Can you get out when you want to? Well, with futures, you can get out. You can get in and get out. You can be very nimble. Same thing with forex. And again, I can get into more details about both of those at another day. I'm going to finish off with just a couple things, and it's what I basically before. 90% of trading is mental. 10% is execution. If you have rules, then that's a good trade. As long as you followed your rules, it's a good trade. I'm going to go back to what we talked about forecast. When you're looking at the stock market, you basically need to be aware of the context. What events, remember those forecast changers? What events do I need to be aware of to know I need to be out of the market? If this stock goes, if this stock goes to support and resistance, what would I do? If it's at support, what do I do? If it's at resistance, what would I do? Am I bullish in the market or am I bearish in the market? Remember what I said? Every day I come up with 10 stocks to the upside and 10 stocks to the downside. So in the morning, if I'm bullish, I know I'm going to focus on these 10 stocks. If I'm bearish, I know I'm going to focus on these 10 stocks because they're in a downtrend. I'm going to focus on these 10 stocks if I'm bullish because they're in an uptrend. Why am I trading a downtrend stock if the market is bullish today? So 10 stocks to go up. On a bullish day, they're in an uptrend. 10 stocks to go down if the market is bearish, and I could just forget about the other 10 based upon the market. So, what is your context? That's how you can make sure you're trading the right thing. Because again, where so many people make a mistake is they buy in space. They don't buy in support. They don't sell the resistance. They buy in space, and they get run over by the professionals. We call it running the stops. And again, because trading is 90% mental, you have to understand the market is not out to get you. How many times have you got in a trade, you get stopped out, and then the market does what you thought it was going to do anyplace? And it is trading, or you do fear of missing out trading. You have to be disciplined. If you can be disciplined and you can follow rules, you can most definitely be a successful trader. Remember, it's about the rules. It's not about being right or wrong. I could care less if I'm right or wrong. I care if I followed my rules. As long as I'm following my rules, I know I'm a good trader. I know I did what's right. So, as we end, basically all that I have for you guys, what's going to be your edge? Again, we could talk more about options and future and forex at a later day. I think I did, hopefully, what you guys would consider to be a good job of introducing you guys to stocks. But you have to define your edge. You can come up with your strategies, whether you can use indicators or not, whether you're not, where I find most people lose money is they go on Google and they find a trading setup. And then they try to trade it. But what you don't realize is a lot of times those trading setups may require a $10 stop, but you can only afford a $5 stop. And so you get stopped at a $5 and you're mad at the system, but the system said you have to have a $10 stop. You got to risk 10 to make 10. And that's why I see people getting on Google and YouTube and trading strategies that they're not mentally prepared to trade. Can you take the heat? Can you take $10 of heat, the stock going against you? Or are you going to start panicking and get out and take the loss? And then again, the stock turns around and does what it's supposed to do anyway. What's your edge? That's how you can be a successful trader. Because our job as trader is to look at the market, find opportunities, and apply the best strategy to that opportunity. That's your edge. Identify opportunities and then put the right strategies to that opportunity. A great book is called High Probability Trading by Marshall Lynch. Again, you got to understand the context of the market, trade when the odds are in your favor, and be able to identify low and high-risk trades. Buying at resistance is a high-risk trade. Selling at support is a high-risk trade. Doing the opposite is low risk. I think that's it. We already talked about, again, defining your edge is all about your trading plan. When you're going to trade, what time frame you're going to trade, what you're going to trade, knowing your money management, your stops, how much things are. That's all about coming up with a plan, defining your edge so that you can, again, level the playing field and trade when the odds are in your favor. You're not trading just to trade, you're trading with a purpose. So I've given, for anybody that's new to trading, enough information for you to be dangerous. Danger. I do not suggest that you just go out right now and start trading. I think, who was it said, where can I go practice trade? That's the best way to do it. My email address, info@michaelglass.com is my email address. If you have any questions, somebody asked me something about places. S&P, or was it Zod, shared a bunch of good links. But that's it. Answer any questions you guys have right now. Again, I hope this was worth your time, and that you got something from it. I didn't get as detailed because, again, I don't know where you guys are at. Anybody, I do have one ulterior motive. I hope to build some people, and I'm not talking about charging people or anything like that, but I'm hoping that a group of us eventually will want to get together on Sunday nights and just go over what we just did right now. Let's put together some stocks. Let's look at them together. That doesn't mean everybody's trading them, but let's throw ideas together. Let's trade together. Let's talk. A networking group. Things, but if I can find some people who want to talk about the stock market, that'd be great. So yes, I guess I did have an ulterior motive. Eventually, I would love for us to get that investment group back together. I talked about on the forum a long time ago. It'd be great to get some other Black African American people who are in the market that I can talk shop with, whether you're a newbie or not. And so, but that's all I got. I do use TD Ameritrade. I do use Thinkorswim. When I was talking about what platform do you recommend, I recommend you use the platform that gives you the best commissions. That's what I recommend, because they're all going to give you the best charts. They're all going to have good charts. Some have better training than others. Thinkorswim, TD Ameritrade, they have some really good trainings, free trainings that I like. I don't know if Trade King offers training. TD Ameritrade and Thinkorswim, they're the same ones. TD Ameritrade bought Thinkorswim. They're great. But the platform you should choose is really dependent upon what you're going to invest. If you're going to do stocks, they're all the same. E-Trade, Scottrade, Ameritrade, they're all really the same. So who's going to give you the best commissions? But if you want to start in stocks and then merge into options and try some debit spreads, or maybe even buying, puts and calls on stocks. That's how you go long a stock. You buy a call. You go short a stock. You buy a put. Then you might want to go into Ameritrade because they're better with options. So that's a long way of saying it really depends on your trading plan and who you are going to buy a platform based on that. Like I said, I'm more into futures right now, and so I wouldn't do Thinkorswim Ameritrade for futures. There's better places for that. So I hope that is somewhat of an answer. Let's see if there are any other questions. Yeah, as I said, I believe once I hit stop broadcast, this will become available right here. You just come back to this link, and it will be available as a video on YouTube, I guess. I just don't see any other questions. So with that, again, info @michaelglass.com. If you have any questions, I'll be more than happy to answer for you free. And like I said, if we can get a group of us that want to start hooking up, I don't know, every other week, every week, once a month, whatever, that's going to be my end goal. I'm going to post that to the board, who wants to get together to talk shop. That's all I got. One last going once. Any other questions? It's 9:38, so I'll go a couple more minutes if there's any questions. Otherwise, guys, again, thanks. Hopefully, you guys found this beneficial and you learned something or maybe refreshed on something. Again, this is more introductory. It was not, advanced stuff. if we get good feedback, if you guys want to, I'll consider doing a more advanced one. But we'll see what happens. Wait a minute, did someone just ask a question? My screen just jumped, so let me just make sure. Oh, Blackhawk, you're welcome. Thank you. I appreciate that. Zod, thank you. I appreciate that. Again, I'll be more than happy to do it again. I'll be more than happy to. And like I said, I think it'll be great if we just got together. So, Westner, I appreciate that. One more minute. S&P, thank you. All right, guys. Again, I appreciate it, the positive feedback, and despite whoever that was on the board just saying I was trying to spam you guys or whatever, again, I was just really trying to give back. I'll see you guys on the board. Peace.